price of oil has dropped again to the lowest levels in more than 5 years. It prompted sharp falls in major stock markets as investors worry about weakening demand next year. The BBC's Andrew Walker explains.
Another day, it seems, and another fall in the price of oil. It's partly a story of weak demand, as several major economies have turned in disappointing performances. China is the second biggest oil user, so the slowdown there has been a key factor. It's also about ample supply. Last month, the producers group OPEC met and decided against production cuts, though some member countries wanted action to stabilise prices. And there's another big player that's come back onto the stage in the last few years, the United States. American crude oil production peaked in 1970 and then declined relentlessly until the shale oil revolution a decade ago. Now the US is one of the biggest oil producers on the planet. So where next for the price of this vital commodity?
It can certainly go lower even from current levels, but that's all because the first half of next year looks like a very oversupplied market. We still won't see demand growth picking up very rapidly, and we're looking at a lot of additional supply from non-OPEC sources coming online. Things that have been drilled, that are being brought into production, aren't yet responding to low prices.
And the other side of the oil price equation, demand, may also take some time to respond.
Demand growth has been very weak this year, and that's one of the triggers for the price fall. I think we should start to see it recover. We're still quite cautious on the forecast for next year, but certainly low prices do encourage more consumer spending. People will be buying vehicles as well as filling their tanks more often, and that will feed through, I think, into better demand growth numbers end of next year, 2016 and onwards.
In the meantime, it looks like more tough times for many oil-producing countries. Andrew Walker, BBC News.
Let's get more on this. Michhele Fraury is in New York for us. Michhele, as Andrew said, it might be not great news for countries that produce oil and rely on a higher price for it to balance a budget. But for us consumers, energy prices, petrol prices, they should be going down, and that should be a good thing, yeah?
Well, it certainly does help people when they go to the pump, the petrol pump, to fill up their car. When you're looking at your energy bills, this can all start to come down. You can start to see that trickle through. In some ways, you could argue it acts as something of a pay rise, one that certainly has been in short supply here in the United States. There have been estimates that Americans could save as much as $500 a year spending less money on fuel. So a huge difference to people's pocketbooks. And of course, that means that you have many economists rushing to try and calculate what impact that means. When people have extra money in their pockets, what will they spend it on? Will they spend it elsewhere? That could have a knock-on effect and actually help boost growth. So that's something that many economists are still trying to calculate. We haven't got exact figures yet, but something to keep an eye out for in the future.
And yet, on the flip side, the markets didn't like it today. Do we have any idea of how low it could go?
Well, I mean, you heard there in the report there are various estimates that it could go lower still. I think the key concern, and the reason you're seeing the markets react the way they have, the stock markets react the way they have, is because of what it says about the underlying picture, and that is that we're seeing a weaker global economy. That's a worry, and what happens is that you see people, everyone from companies to individuals, using less oil. That's reflected in the falling oil price. That's not really necessarily a good thing if you have a weak economy. Certainly sort of for those looking for more growth. That's why the stock markets are concerned. The other thing is what it says about deflation. It's something that central bankers around the world have been looking at, this idea of falling prices, not just in oil, but in other goods. And that could have a knock-on effect on how central bankers decide when interest rates should eventually go up in respective countries. This is why you're seeing the stock market looking at all of this, the big picture, and suddenly getting a little bit spooked right now.
Michhele, it's fascinating, all of the complexities and all of the sides that faces the price of oil. Thanks very much for explaining it to us.